Welcome back to Investing Talk podcast. We're going to be taking a look at JD.com today.
JD.com.
You've shared some really fascinating stuff on this company, this Chinese e-commerce giant. And our goal today is to kind of pull out what's most important for people to understand right now.
Absolutely.
Yeah.
So we've got some analyst reports, financial data, a little technical analysis, and we're gonna try to synthesize all that to give folks, a real clear picture of where JD.com stands.
Okay.
That's the mission.
I like it. Sounds good. So to start off, can you just give us a little overview of where they sit in the market? I mean, it's a huge e-commerce market, obviously.
Oh, absolutely.
How do they fit in?
So JD.com is one of the largest B2C e-commerce platforms in China,
Okay.
and their key competitor is Alibaba's Tmall.
Right.
Tmall is a huge presence. But JD.com, they have some key advantages. One is that they have a very strong logistics network. They operate on a direct sales model, which gives them an edge, particularly in categories like appliances.
Okay.
And in fact, I think some of the information we have here shows that we were China's largest retailer by revenue in 2023.
Wow. Okay.
Yeah.
Largest retailer. That's a big deal. So let's get into the financials a little bit. Looks like at first glance they're pretty healthy, right?
Oh, yeah, for sure. So in 2023, they reported a revenue of $152.8 billion.
Okay.
That's huge. And a net income of $3.275 billion.
Billion.
Yeah. So they're definitely, they're doing well.
All right. And what about the stock? Where's that trading right now, and what are analysts saying about it?
Yeah. So the stock price is currently hovering between 42.24 and 43.13.
Okay.
Analyst price targets range from $40 to $55.
Okay.
So there's room for potential upside there.
All right. Now, you mentioned the PE ratio. You said that was something to pay attention to here.
Right. So their PE ratio is a little bit higher than some of their peers.
Okay.
And that often suggests that the market is pretty optimistic about their future growth potential.
Makes sense.
Maybe their strategic initiatives. So it's almost like investors are willing to pay a little bit of a premium because they're anticipating strong earnings down the road.
They see good things on the horizon.
Right. Exactly.
Yeah. And it does look like, they're not just sitting still. We've seen some moves in terms of their services. They're, kind of expanding beyond China a little bit. Tell me about that. What's going on there?
Yeah. So in terms of kind of strategic growth, they have been expanding their services.
Okay.
So, for example, in October of 2023, they launched a 4-hour delivery service in Hong Kong.
Wow.
Which is pretty ambitious when you consider the logistics of Hong Kong.
Yeah, that speaks to the strength of their logistics network that we were talking about.
Right, exactly.
And then they're not just sticking to Hong Kong, right? They're going global as well.
Right. So in September of 2024, they actually expanded their global sales to the United States,
Okay.
Japan, Singapore, and Malaysia.
So a big push into Southeast Asia.
Yeah, that's right. And that's really interesting because, there were some really established players in those markets already.
Yeah.
So, it's a pretty high stakes move.
Right.
But, it could pay off big time if they're successful.
Yeah. I mean, you could see how that could really diversify their revenue streams.
Oh, absolutely.
Yeah.
Yeah.
Okay. So why are they doing this? Why are they pushing so hard on this international expansion?
Well, I think that the primary goals are to increase revenue, obviously.
Okay.
And to diversify their customer base.
Yeah.
Not be so reliant on a single market.
Right. Now, as we kind of look ahead, what are some of the trends that you're seeing emerge? Where do their strategic priorities seem to lie?
So I think one of the things that's really interesting, and this is something that you might want to pay attention to, is that they're really focusing on leveraging technology to enhance their logistics and supply chain solutions.
Okay, so not just using it to make themselves more efficient, but potentially turning it into a service they could offer to other businesses.
Right, exactly. I mean, they're really good at moving goods around.
Right.
And so, that could be a whole other revenue stream for them down the road.
Yeah, okay, interesting.
Another thing they're doing is really, diversifying.
Okay.
So we've talked about international expansion.
Right.
But they're also moving into things like healthcare.
Wow.
Property management.
Okay.
So really trying to, not put all their eggs in one basket, so to speak.
Yeah, spread the risk.
Yeah, exactly.
And it seems like they're not just, focused on the external stuff. They're also focusing on their employees as well.
Right. So one thing that they've done is they've really invested in employee benefits.
Okay.
One notable example is the Housing Guarantee Fund.
And what does that do?
It basically, it helps employees with housing,
Okay.
which, can be a really big deal, especially in China.
Yeah.
And things like that can really boost employee morale.
Right. Keep people happy.
Yeah, keep people happy, keep them productive.
Yeah, that makes sense. Now, what about the overall economic climate in China? How might that affect JD.com's trajectory?
Right. So if you connect this to the bigger picture, analysts are predicting that companies like JD.com could benefit from potential consumption stimulus measures in China.
Okay.
So um, if the government does take steps to encourage people to spend more,
Right.
that could really give JD.com a boost.
Okay. So we've talked about their market position, their financials, their strategies. Um, let's dive into the technical analysis a little bit here.
Okay, sure.
So what's been going on with their stock price lately?
So recently, the stock price has been fluctuating a bit.
Yeah, sure.
And that's not too surprising given, the broader market conditions.
Right. Right.
And, the economic conditions we've been talking about.
Okay. And what about the trading volume? What are you seeing there?
Yeah, so the trading volume has been, a bit up and down.
Okay.
But one thing that is interesting is that we have seen higher volumes accompanying some of the price movements.
Okay.
Which could suggest that there's stronger conviction behind those moves.
Okay. All right. So let's get into the some of the key indicators here.
Yeah.
Tell me about the moving averages. What are those telling us?
Sure. So the 50-day moving average is currently around $40 to $42,
Okay.
which suggests a slight upward trend in the recent price action.
Okay.
And then if you look at the 200-day moving average, which is around $38 to $40, the fact that the stock price is above that level is generally seen as a bullish sign.
Right.
It suggests a longer-term upward trend.
Gotcha. And the relative strength index, the RSI, what's that looking like?
Yeah, so the RSI is currently sitting around 50 to 60,
Okay.
which indicates, kind of a neutral to slightly bullish position.
All right.
Anything above 70 would be considered overbought.
Right.
And anything below 30 would be considered oversold.
Gotcha.
So, we're kind of in the middle ground right now.
Okay.
But, but it's definitely not a bearish signal.
All right. So given all of that, what would you say is a good approach for investors right now?
Well, based on this technical analysis, I would say that, for current investors, a hold might be a reasonable strategy.
Wow.
For new investors, you might consider buying if the stock dips below 40.
Okay.
That might be a good entry point.
Makes sense.
I wouldn't recommend selling right now unless, something really drastic happens.
Right, of course. And, as always, this is not financial advice.
Right, exactly.
Just information.
Yeah.
People need to do their own research.
Always.
So let's tie it all together now. How do these current trends, the financial performance, the expansion plans, how does that all align with the technical analysis that we're seeing that suggests some potential upside?
So what's really encouraging is that the company's financials are strong.
Right.
They're growing. They have a clear plan for future growth.
Right.
And that kind of fundamental strength can really support those positive technical signals that we're seeing.
Okay.
The market tends to reward companies that are doing well and that have a solid vision for the future.
Makes sense. Now, what about this emphasis on logistics and diversification? What does that mean for the long term?
Right. So I think that focus on logistics, is really, really smart.
Okay.
Because it not only strengthens their core e-commerce business,
Right.
it also gives them the potential to generate new revenue streams by offering those services to other businesses.
Right.
And then the diversification, that's just good business practice.
Sure.
It reduces their risk. It allows them to tap into new markets.
Okay, so thinking back to those, analyst price targets.
Yeah.
And now considering the technical indicators, what are some key things that our listeners should be watching for moving forward.
So here's what I would keep an eye on. Pay attention to how they're executing on those expansion plans,
Okay.
especially in the U.S. and Southeast Asia.
Okay.
Um, any news on consumption stimulus in China? That's going to be important.
Right.
And then, watch those technical levels.
Okay.
See if the stock dips below 40 and see how it's behaving relative to that 200-day moving average.
Right. Gotcha. So to wrap up, JD.com, strong business, growing their reach, expanding their services. The analysis seems to suggest some potential for growth, but as always, people gotta look at the bigger picture, do their own research.
Absolutely. What are your takeaways? What really stood out to you about JD.com, and what questions do you have?
That's a great question. We hope this has been helpful. Be sure to like, comment, subscribe, and let us know what other topics you'd like us to dig into in the future.